Goldman Sachs seeing a 2 to 3% surge in the S&P 500 if the Iran conflict sees a quick resolution. They suggest that this scenario would normalize oil prices, ease inflation, and allow the Fed to proceed with rate cuts. Joining me now, Laffer Tengler, CEO and Chief Investment Officer, Nancy Tengler. All right, Nancy, before we get to Goldman's report, I want to get your reaction to this news we got this hour that thousands of Marines are being sent to the Middle East. What do you make of that?
Yeah, I think it means that the president is serious about getting this done quickly. You know, Jerry, my whole adult life has been defined by geopolitical shock perpetrated either directly or indirectly by Iran. So I think it is time to finish the job. I applaud the effort, and I wish these Marines and other members of our Navy and Air Force Godspeed.
Well, it's interesting because it could allow them to take on other roles. We don't know yet, and I'm sure we'll be asking those questions this afternoon. But I want to get you back to Goldman's outlook, which is pretty upbeat and positive. Do you agree with them, and do you think we can get a quick resolution?
I do agree with them, and I do think we can get a quick resolution. The headlines are driving the algos, which are driving the hedge fund managers. And so we've seen in the last couple of days, we've opened up pretty strong, and then the headlines start, and then we see the sell-off. But if you look at the underlying fundamentals of not just companies, but the economy, and we can talk about GDP if you want to, but if you look at that as an investor, you have to be optimistic with outstanding earnings growth, but more importantly, excellent guidance, margins near all-time highs, and productivity improvements up the wazoo. This is a market you want to own, and I think you want to own it for quite some time.
Nancy, I hope you're right. My fingers are crossed here. And Goldman is saying, look, if you believe this, you need to start getting ready to buy now. You need to buy now. What sectors do you believe will emerge as winners here?
A couple. And I would just point out, this feels a lot like DeepSeek and then the invasion of Russia into Ukraine. We got these great opportunities to pick off high quality names at lower prices. So we've recently added to a number of names. We added in technology to Microsoft, Palantir, CrowdStrike. We've added in infrastructure, and Apple, for example, ServiceNow. In infrastructure, we added to GE Vernova and Power, Quanta Services. And then we've been adding to consumer discretionary names. And two of those that I like a lot, even with recent disappointing earnings from Ulta, I think that's a winner for the long term. And TJ Maxx is one of our largest and most cherished holdings.
Wow, that's a wide range of stocks there. You know, you normally talk a lot about tech capex fears, right? Are they overblown? Yes. What is going on there, and do you think there's more room to run?
Yeah, so, I was managing money in the 1990s, and if you go back and look at capex spending, tech capex spending, draw a median line, what you would see is that back then we were about 2 standard deviations above the mean. Right now, we're just a small blip. Back then, we were funding capex, tech capex, with debt, and now we're funding it with cash and free cash flow and cash on the balance sheet. We've started to see free cash flow hook back up for the Mag 7 after the beginning of the AI arms race, where it sold off dramatically or declined dramatically. So I think these companies are in fine shape. If you look at the balance sheets, Microsoft has $89 billion, Apple has $130 billion. There's a lot of money in cash on the balance sheet. These companies have a lot of levers to pull. So I wouldn't worry about the capex spend. In the old days, that was good news, Jerry. It meant the companies were investing for future growth. And now it's suddenly, bad news because Wall Street analysts can't fit it into their models, or they think it's too much. I'm going to leave that to the CEOs. They are monetizing. We're seeing it across sectors, and we think it continues, and we're just in the early stages.
Who's the beneficiaries of that spend right now?
So it's the chip names, of course. So you've got, NVIDIA, AMD, and Broadcom. And we saw Broadcom, go from 10 billion in AI chip sales last quarter to 100 billion over the next year and a half. So these are huge backlogs. And then the infrastructure names. GE Vernova has a backlog of 150 billion. It's up 25%. Quanta Services is up 27% at about 45 billion. The data center build out continues. And then I think some of the names, some of the energy names, and by energy, I don't necessarily mean integrated oil companies, but some of the nuclear names, and then some of the just traditional utilities. One of the names we like is New NEE.
I don't want to bring it down because we had a very positive conversation about stocks here and the future of the economy, but I know there are a lot of concerns about the private credit market, lots of worries.
Yeah.
I actually think that's a bigger threat to the U.S. economy than what's going on in Iran right now. But Blue Owl, BlackRock, KKR, you've seen such big issues with these companies. What are your concerns here? Do we get past it?
Yeah, well, we don't own any of them. And I do think we get past it. We've started to look at one or two of the names because the valuations are so suppressed. What's interesting, Jerry, is that most of them, Apollo owns 2% of their book is exposed to software. But the problem that I think they're facing is this gating of withdrawals. And so if you tell people you can only take 5%, well, they want to take 50%. So even though that was in the agreement they signed when they invested, it doesn't create confidence. And so I think once we get through it, the higher quality names will come to the top. And, we think that's probably Blackstone and Apollo. And those are the names that we're looking at, but we haven't yet decided to step in.
I'm going to have to interrupt you there. Thanks for helping us out tonight, Nancy. Great to see you.